Hello everyone and welcome back to Excel.com. It's Monday, December 4th and you're watching the weekly technical outlook video. My name is Christina Barthenidou, and on this video I'll share my view on dollar yen, Aussie dollar and dollar loonie. It will be a busy week of US data releases, including the all-important US NOFA payrolls report, and we have two central bank meetings in Australia and Canada to watch. Those events could also make the Australian and Canadian dollars more volatile this week. So starting first with dollar yen and the NOFA payrolls report, the data are expected to show a moderate increase to 180,000 from 150,000 last month. But I believe that the unemployment rate and wage growth could be bigger market movers. If we get better than expected readings there, that could perhaps ease the rate cut expectations and therefore help the US dollar to rebound. We can see that dollar yen is currently trading at the lower band of this 9-month-old bearish channel, 146.55. If that floor breaks, then I expect more sell-off, probably towards the 144.50, 145 territory, where the price peaked at the end of June and also bottomed out at the end of August. So that could be another critical territory to watch before we reach the 200-day moving average of 142.20. Now, looking at the RSI and the stochastic oscillators, the indicators are not far above oversold levels, so rebound cannot be excluded either. Nevertheless, I would like to see a decisive rally above 148 and then beyond 149.60, where the 20 and 50-day moving averages are located, before I target again this broken support trend line at 151.20 and the 2022 high 151.93, where the price peaked back in October and also in November. If we manage to reactivate this uptrend above that sailing, then I believe that the next stop could take place around 143.40 level, where this short-term tentative resistance line is located. Above that, I would target these two steeper resistance lines at 155, 155.55 at the moment. Now turning to Aussie dollar and the Reserve Bank of Australia's monetary policy meeting. The central bank kept the door open to additional tightening last month, so it will be interesting to see whether policymakers are willing to raise interest rates once again, perhaps next year. Inflation is still well above the central bank's 2% midpoint target, and Australia has recently registered a slight increase in wage growth, so that could make this week's policy meeting could be challenging for policymakers, and it will be more difficult for them to end monetary tightening. We also have some Chinese data on the calendar, so it will be overall interesting to see whether Aussie dollar will manage to stretch this rebound above this important resistance line, where the price is still struggling to overcome at 0.6655. If we cross above that line, then the next obstacle could come around 0.6715. We saw the pair facing some congestion around this territory. If this proved easy to overcome, then the next target could be the 0.68 constraint zone. Now, from a technical perspective, the pair is very close to overbought levels. The RSI is still hovering around its 70 overbought mark, so there is a potential for a downside correction. If that happens, then the 200-day exponential moving average could come first into view around 0.6565. Then below that, I expect some consolidation somewhere between 0.6520 and near the 0.6470 barrier, where the 2020 support trend line is currently located. Then finally, turning to dollar loonie and the Bank of Canada's policy announcement, the central bank is also expected to keep interest rates steady. but the latest disappointing data out of Canada could make policymakers more willing to signal the end of monetary tightening. If that happens, if policymakers appear more cautious this time, signaling the end of monetary tightening, then dollar unit could rebound. Perhaps it might extend today's recovery above the 1.3520 level, where the 200-day exponential moving average is located. Then, in this case, resistance could initially come around the 1.3650 territory, where the descending trend line coming from the 2020 top is placed. Higher than that, I would like to see a decisive rally above the 1.37 and 1.3750 territory, where these two constraining lines are placed. If we successfully close above that region, then the pair might face a fast rally up to the 1.3840 and 1.3870 region, where it peaked back in November. If now a faster rally above this region could then take us up to the 1.39 number. This is where this resistance line coming from June 2023 is located. From a technical perspective, a rebound cannot be excluded, given that the RSI and the stochastic oscillators have already reached oversold levels. Nevertheless, if the price fails to close above the 200-day exponential moving average today, that could create more selling, probably towards the 1.34 or 1.3430 region, where this support line from July 2000 or the support line from November 2022 is placed. A break below that could confirm additional losses, probably towards the 1.3290 level. This might be worth it to keep a close eye on, since the 2021 ascending trend line is also placed here. So that's all. That's everything I wanted to share with you for the most important FX pairs this week. Thank you for watching, and hope you have a great trading day. See you next time. Bye bye.